Welcome, everyone, to Benzinga All Access here on Friday morning. Really excited to have all of you guys with us. We've got some great companies coming up, some really good discussions. We're going to roll our intro first so you can see what All Access is all about, and then we'll go ahead and get into some news headlines before we get started. Perfect. All right. So before we get started, a couple of items to go through. We want to talk about the giveaway that we do on All Access every Friday morning as well, a $100 giveaway for filling out the contact link form in the description underneath the YouTube video below. You can also scan the QR code on the screen to fill out that form. You'll be entered with everybody else that fills that out to win $100. We announce that winner on the following show after All Access later today. So make sure you fill out that form at some point during the show or whenever you get a minute. We also want to talk about our sponsor, Ticker, who sponsors every episode of All Access throughout 2022. You can get involved with Ticker and get stock perks for owning the stocks that you're already involved with. Nike, Starbucks, Amazon, Google, any of those companies that you own stock in, you can get stock perks for by working with Ticker. So we're going to play their intro video now. Make sure you get involved with Ticker.
What is Ticker? That's right, Ticker with two I's, just like you, because it's for you, for investing, for stock perks, for connecting you to public companies who reward you as a shareholder, as a brand lover. That's why people can't stop tickering. Ticker, where investors discover shareholder perks and consumers become investors in the brands they love. Ticker. Start tickering today.
Awesome. All right. Before we get rolling with our first company, we're going to do our typical headlines check and see what's going on out there in the markets and in the world. We've got some really interesting headlines this morning. One of the things we do at Benzinga every single day is we record short video news clips that go out to our socials and benzinga.com, talking about the top headlines that came out overnight from yesterday, anything that's trending and buzzy that investors should know about, and not only from the investor's perspective, but just the interesting things that are going on in the world too. So a couple of top headlines we've been talking about today. The labor strikes increasing right now amid the inflation and the tight job market. So more workers hitting the picket line. The costs of basic necessities as groceries and fuel are increasing. That tight labor market is taking away some of the risks of leaving a job. There were 180 strikes with approximately 78,000 workers in the first 6 months of 2022, but that's compared to 102 strikes and 26,500 workers in the same period of last year. So we've seen this increase in tandem with the increase in inflation. We've seen that over the last couple of months. Something else to keep an eye on, especially as we're trying to tamp down this inflation, and Powell is obviously still working on getting that to kind of come down on a lowering tier. So something to keep an eye on there. The other thing we noticed in the headlines this morning too, the DOJ, or the Department of Justice, is building a network of prosecutors for cryptocurrency crime, which obviously is still a big topic, especially in the crypto world. But the U.S. Department of Justice built a network of federal prosecutors across the country to support law enforcement's efforts to combat crimes related to cryptocurrency. So something else to keep an eye on here. Obviously, the crypto bear market kind of still in play. It's obviously something we're looking for a bounce back in sooner or later, but we're still in a bear market for the most part. And what they're doing now is they're coming in and they're trying to clean up all of these issues that have happened in the crypto market in the last year, of which I think we all know we've seen plenty of. There's been plenty of crime, plenty of issues in the crypto market as a whole. So the Department of Justice building a network of federal prosecutors, something to keep an eye on there to see if they're actually able to make traction. Another interesting headline coming from the Evening Standard, which we used as a source, was Uber's Slack system being taken offline following a security breach caused by an 18-year-old hacker. He gained access to an Uber employee's Slack account and posted an ad, or actually posed as an IT assistant, sending a message that said, "I announced that I am a hacker and Uber has suffered a data breach." So right after that, the hacker called for higher pay for Uber drivers, apparently was advocating for the employees of Uber, but still hacked their system, and obviously not something he was supposed to do. So Uber obviously doing some PR this morning, trying to fix that problem and clearly seal up any gaps they had from this 18-year-old hacker that came into their Slack system. And then the last big headline that we're keeping an eye on was FedEx cutting its sales forecast by $500 million. Their stock actually dropped 21% in trading on Thursday. It warned that the slowing economy is going to cause it to lose $500 million in revenue in 2022, and that it will also be reducing flights and parking aircraft cutting hours for their staff, delaying hiring plans, and closing 90 office locations and 5 corporate offices. So, kind of just another bigger sign, especially with a company like FedEx that has such a huge impact on the market, is responsible for so much shipping around the world. Looking at a slowdown from their perspective, it's kind of a sign for the rest of the overall market about what's going on out there, something that all of us should be keeping an eye on. So, those are some of the top headlines that we're keeping an eye on this morning, something that we want everybody to kind of be aware of as we're looking at the markets. Again, something else we'll call out this morning, too. We'll be doing another interview with Anne-Marie Band, CEO of the Trading Book, which we do every Friday shortly after All Access. We release that Monday or Tuesday. But Anne-Marie gets to go into the markets and tell us what happened last week, what we should be looking at in terms of analyzing how the week came together, but gives us a look at next week, too, and says, here are the headlines we should be looking out for. Here are the announcements you're going to want to watch. Here's what's going to move the markets. And here's some trade ideas, too. Shorts, longs, ways to position yourself in the market, but the headlines that you can watch to help you frame your trades, too, and make sure you're making the right decisions. So Anne-Marie Band will have another interview later today that we'll be releasing on Monday or Tuesday of next week. When you're analyzing the markets and you're looking at headlines like FedEx cutting the revenue by $500 million, there's a lot to analyze out there when you're framing and making your trades. So we try to put as many resources out there for you as we can, interviewing experts like Anne-Marie Band. Make sure you check things like that out, keep analyzing the markets, and make sure you're in a good position. With all that being said and our headline check out of the way, we're going to go ahead and move into bringing on our first guest for All Access, Louis Hoch, the president and CEO of USIO, traded on the NASDAQ. Let's bring on Louis and get started. Louis, thank you for joining us. How are you?
Hey, good morning.
Great to have you here. Our first guest on All Access this Friday morning. Kicking us off, can you start us off by telling us a little bit about USIO? What is the company all about?
Yeah, thank you. So we're a high growth oriented fintech payment facilitator, and we process payments for companies all over the United States. A lot of household names that you would know, like Charter Communications and Open Table and top 30 universities in the United States, and our platform operates in 200 cities in the United States, and we just move a lot of money. Last year, we processed almost $10 billion in payments. If we were a bank, we'd be the 50th largest bank in the United States.
Outstanding. Okay, so we've got a profile of what you guys do. Can you talk a little bit about the backstory of USIO getting to where you guys are now? How did this all get started?
Well, the company was formed 24 years ago, and the last 7 years is really what matters. But we originally formed as BillServe, which was the industry leader in electronic bill presentment and payment, and we ended up selling that part of our business and focused on becoming the leader in ACH processing, which today we're a significant player. It's so much so that we actually have our own bank routing number and direct access to the Federal Reserve. And we have so much volume that goes to the Fed that, again, we would be, a top bank if we were a bank, but we're not a bank. So, and through the years, we've evolved into add a lot more payment channels, and we're really diverse when it comes to the payment channels that we offer. Our company owns all of our own technology that makes us very flexible, and we've just evolved over the years with our tech stack and has created a lot of innovations.
Fantastic. Okay, so can you talk about some of your clients with the technology that you have and how your company functions? Who are the customers and the clients in your space that you serve?
Yeah, we're across many different industries, from mortgage servicers, insurance companies, utilities, a lot of government, cities. Again, our platform operates in over 200 cities, including 7 out of the top 10. New York City, city of Los Angeles, Houston, just pretty much every major city uses our platform either to disperse money or to accept payments for like fees and fines, and so we have a wide, diverse customer base. We typically do not process payments in a retail environment, so you won't see us like in a restaurant or in a retailer, which is really good, so we're not affected by kind of economic downturns like other payment processors are.
Makes a lot of sense. So, when you talk about weathering those economic downturns by doing what you're doing, can you give us a run of the last couple of years in terms of financial positioning, in terms of how the company has done on the revenue side? How have the last couple of years fared, especially through the COVID era and everything else? Did the COVID era affect you guys? Did you see any negative downturns from that? But how did the last couple of years look as a whole?
Yeah, well, if you pull up slide 4, you'll see a really nice revenue chart. So we actually grew revenues in COVID, which the majority of our competition wasn't able to do because they had retail exposure. So while parts of our business did get hit during COVID, other parts of our business, because we focus on being diverse in the industries we serve, but also diverse in the payment channels that we offer. So um, while certain payment channels or payment types uh, weren't popular during COVID. People didn't want to swipe a card at a payment terminal. They were worried that the payment terminal was dirty. Um, so our card not present transactions went up. Also, on our prepaid card processing, we started issuing more virtual cards and instead of issuing plastic cards. So that volume went up. Um, we also uh, experienced a huge uptick in government disbursements during that time frame. And so we were able to grow revenues in 2020. A nice trend that's happening right now is we have a large book of non-bank lending, and people are taking out loans, and those loans, because people have less money right now, and they are taking out loans, and quite frankly, a lot of them are not paying them back. So our return check processing is the highest it's ever been in the history of our company. So, that diversity strategy, it makes us different. It's a big competitive advantage for us. So we're able to weather economic downturns that our competitors can't when they're focused on a niche, where they're focused on just restaurants or travel, where we don't have exposure at.
Got it. No, that makes a lot of sense there. Now, I know we have the slide deck pulled up and we've looked at the revenue for the last couple of years. Are there any other slides you want to turn to in here to kind of display and go through?
Yeah, slide number 3. So we're all about transactions and dollars processed. Those are our two main operating metrics, and you can see we've been doing really, really well at that. And this year, these slides go through 2021. This year, we're experiencing a similar type of growth. So last year, we had 94% growth over 2020 in transactions. So our product lines, we either earn a click charge per transaction or we earn a percentage of the dollars we process. So both are important. And we just had tremendous growth, 94% transaction growth last year, 184% growth dollars processed.
Got it. Fantastic. Okay, so let's take another look at the business from just the way that it's structured and that side of things. You have four distinct business units that make up USIO. Is that correct? Can you take us through those four different units?
Sure, sure. Um, our first business unit, prepaid card processing, is a very innovative business line. We issue prepaid Mastercards. They can be branded. We issue them for the top 30 universities in the United States, branded with the university logo. We issue them for companies like Open Table. We issue them for top 200 cities in the United States for them to do disbursements. One of the newest clients that everybody seems to understand is MoviePass. MoviePass just is relaunching, and in their first week of signups, they signed up over 750,000 people to their service. Um, when you go to the movie theater, you're going to be swiping a MoviePass card that we're processing the payments for. Um, we also process cards for top drug manufacturers for their clinical trials. Um, we are doing kind of community. If you live in a certain community, you're receiving a stipend. Or the one that comes to mind is the Compton Pledge. If you live in the city of Compton, you're receiving a monthly check for $500 or $1,000 a month. There's about 20 of these types of programs in the United States. We're the industry leader in those programs, and they're all privately funded, but they're nice reoccurring. That business line we earn income when people spend money on the cards. We also earn money when people leave money on the cards. Um, we have unique technology. We have the ability to push a card directly to your phone without you requesting it. So it allows us to do really cool promotions. So you could be like at a University of Alabama football game, and you can see on the scoreboard text "Go Bama" to this short code to receive a free Coke. And if you do it, then a message comes to us, and then we would push, branded University of Alabama football card, MasterCard to your phone, and then you could use that card in the stadium for like 4 hours to purchase your Coke. If you don't use it or you leave the stadium, we take the $4 off and give it back to Coke. But we'd leave that card in your wallet, and then potentially send you some text messages on how to reload the card. And we do these cards are used for many different things. City of San Jose uses it for a cash for trash program. We did a lot of COVID programs, COVID incentive programs. City of New York did a huge program where they were handing out $100 cards for people to get vaccination shots. They actually distributed $90 million in the course of about 4 months. And it's an exciting tool that we have, and our tech stack for these programs are very, very rich. So that's our prepaid division. Payment facilitation is card processing, it's credit and debit, but we're different. We only sell to software vendors or integrated software vendors. We call them ISVs. And so those software vendors or ISVs, they write software for a specific industry vertical. So one of our ISVs provides software to 20,000 doctors' offices, and their software runs the whole doctor's office. And they like to work with us because we share revenue with them. But more importantly, through our tech stack, it makes their software look like they're a payment processor. So it enhances their brand, and it helps their doctor's office thinks they only have one relationship to deal with. And it's easy for that doctor to do business with that software vendor. And we like the business model because it's a distributed model that that's highly leveraged. And we make one sale to a software vendor, we get access to thousands of clients downstream, and then those clients hopefully are growing organically. So we joke around the office that that business unit we could stop selling stop selling today, and it's still going to grow double digits next year. The third part of our business is the most mature part of our business is ACH processing. We have significant scale there. Um, and we're not just certified, which is a regulator that governs ACH payments and wire payments. Uh, it's a big honor to be certified. There's 9,000 third-party senders in the United States. Out of those 9,000, there's 10 that are certified, and out of those 10, 8 of them are payroll processors, which we don't compete in. And so there's only 2 payment processors that are certified. Because we have that certification, and because of the huge volume that we actually have our own bank routing number, and we have direct access to the Fed, which just gives us a huge competitive advantage. And you wrap that around our technology, it helps us win a lot of business. And because of all those competitive advantages, Mastercard just announced that we were selected to be a supplier into their open banking network. So just us and one other competitor are in that open banking platform. So ACH is a big part of our business and continues to grow. The fourth part of our business is we operate a print house where we print just first class mail statements, invoicing, tax notices. What makes us different is we start out electronic. So before we print anything, we convert everything into a PDF. So we have a huge database of PDFs, and we extend those electronic statements and invoices out to our banking clients, insurance clients, utilities, and a lot of times we're actually attaching payment to them as well, so that the end customers can pay and view their bill online. Um, and we have a great customer base with that part of our business, and that part of our business is really outperforming management's expectations. So that's the four parts of our business.
Fantastic. Okay, now that we've walked through the four parts of the business, we've got a handle on exactly what it is that UCO performs. But in your mind, would you say that the four parts of the business, and are there any other factors that distinctly set you guys apart in the payments industry from other competition?
Yeah, but the main thing is the diversity. I mean, we're in all industries, right? So if one industry feels some pain from economic pressures, another industry will feel some gain. And then we're in all different types of payment channels. So, if a payment channel is hit in a economic downturn, another payment channel will take over, and that makes us very unique. The other things that make us unique is that you can pick up the phone and find us, which sounds simple, but in our industry, it's it's actually a competitive advantage. So we also have this amazing reputation of just being able to do what we say we do. So those things has just created some exponential growth for us, and we're going to continue to grow and and have some great growth rates.
Terrific. Okay, now going back to the recent news that you guys have too, I want to start to dive into some of that more. The Movie Pass announcement that you had just pretty recently here. Tell us again why that's so significant. What is Movie Pass going to do that's going to drive the business forward?
So, well, Movie Pass, I don't go too much into history of Movie Pass, but Movie Pass was a significant milestone for the movie industry. When they were live years back, they represented 3% of all movie sales in the United States, which is just amazing. I mean, they're not even part of the industry, right? So, um, and the original founder of Movie Pass um, raised some money and ended up exiting um, when he brought in some, his new new funding partners, and he didn't agree when they changed the business model. So he bought the assets out of bankruptcy and is bringing it back forward. He has a new business model. We believe it's sustainable because he's working with the studios, giving the studios data on the consumers that they've never had before, and he's using credits. Um, it's exciting for us because it's using technology that only us and one of our competitors has, Marquetta, and it's called remote authorization. So the cards in our system, the Mastercards, will actually have a zero balance, and we'll actually send the authorization to MoviePass for approval. And so that, give you an idea of the richness of our tech stack. But more importantly, there's going to be a lot of transactions. Um, and they're going to be small ticket transactions, $10, $20. So, more transactions will make more money. But the power of the Movie Pass brand means that he's going to have a lot of cardholders. He signed up over 750,000 week one. Um, when they were live, uh, you know, years back, they had over 3 million cardholders. We didn't have that account. Another company had the account back then, and it was their largest deal that they had. So we think that it's potentially going to be our largest deal.
Outstanding. Okay, and then in August too, I wanted to talk about the new marketing campaign that MasterCard had you featured in. Could you talk about that and why it was so significant for UCO?
Yeah, I'm not sure which one you're talking about, but
I think we had the prepaid card solution for you guys that UCO was doing specifically that was featured in MasterCard's marketing campaign, which we saw all over the place, and obviously we saw it at Benzinga too. But I don't know if you were directly involved in that, but it looked like it was a really cool part of MasterCard's marketing
oh,
campaign that UCO did.
yeah, I think we talked a little bit about so Mastercard profiled um, the big campaign we did with the city of New York um, uh, for the COVID vaccination program, and it was a lot of money that we distributed in a short period of time, and it was $90 million that New York City distributed in from November of 2021 through January of 2022. And what was unique about that program is that if you were a participant in that program, you got to, you received kind of an offer code when you got your shot. And that customer got to choose, did they want a virtual card or a plastic card? And if they choose a plastic card, then they would type in their address, and of course we would mail it to them. But if they chose a virtual card, we would instantly pop it into their phone, and it didn't matter if it was an Apple product or a Samsung product or a Google product, but the card would instantly go into their phone, and then they could transact business. They could make purchases, or they could go to an ATM that was tap and pay enabled. And City of New York's very pleased how fast that money got out.
Outstanding. Okay, now let's take a look ahead into the next couple of quarters, right? Again, we're talking to retail investors here. This is a very retail investor focused audience. They're in the markets every day. Over the next couple of quarters and leading into the beginning of 2023, what items from UCO should we be looking for that are going to move the needle for the company? Anything specific we should have our eye on?
Yeah, so in our last quarterly conference call, we let everybody know that Q4 is going to be back to a cash generating quarter. It's going to be a nice quarter. This last quarter was not a great quarter. In fact, after going 9 quarters in a row of generating cash, we had a quarter that was down because our largest customer filed bankruptcy, and that was Voyager Digital, and so we kind of got caught off guard for that. But Q4, we're going to be back on track. We're going to have a lot of card spoilage. That's where people leave money on the cards, and then eventually, when the cards expire, we generate revenue from that, and that starts to hit for the full fourth quarter, and it'll continue Q1, Q2, Q3, and so Q4 is going to be a nice quarter for us.
Outstanding. Well, we're looking forward to watching the future. Obviously, there's more that we want to talk about here. We're coming to the end of our time, but we sincerely appreciate you coming on All Access, talking about everything you guys are working on. It's been an absolute pleasure. Louis Hoch, President and CEO of UCO, thank you so much for joining us this morning.
Thanks for having us.
And that was Louis Hoch, the President, CEO of USIO, traded on the NASDAQ as USIO. We're going to keep things moving. Our next guest just joined us a couple of minutes ago. To stay on time, we're going to bring on Marc Bell. He's the CEO of Terran Orbital. Let's bring him on. So we don't have Marc on yet. It looks like he hasn't joined the studio yet, but we are going to keep things moving into the rest of All Access anyway. So with that being said, we do have a couple of other guests coming up around 10. Looks like we're going to have a gap at 9:40 without Terran Orbital here. But as we... All right, we're going to move right into the next guest, and we'll keep things going. Aaron Thomas always has a solution. This is why he's the best producer on the planet. But we're going to move into the next guest. We're going to bring on Steve Foster, the CEO and president of Tenon Medical, traded on the NASDAQ as TNON. Let's go ahead and bring on Steve and get started.
Hello, Michael.
Steve, how are you?
Hey, Michael. Thanks for having me.
Thanks for rolling with the punches here. We've got some
You
some
bet.
scheduling changes going on our end. Things happen last minute. We know this, but thanks for
Understood.
jumping on with us this morning. Appreciate it.
You bet.
Well, kick us off here. Introduce us to TNON Medical. What is the company all about?
So Tenon's an early stage medical device organization focused on the SI joint, the sacroiliac joint, which is, a large joint at the base of your spine that allows us to stand upright. Oftentimes that joint will break down either from degenerative conditions or as a result of a long spinal fusion where load share changes, et cetera, require the joint to be addressed. A lot of times the issues can be resolved with conservative care. For the patients that don't respond to conservative care, that's where we come in with a surgical solution to lock that joint down, to fuse it so the motion goes away and subsequently the pain goes away. We're FDA cleared. We've been involved in early launch activities here in the first part of 2022 and are preparing for a full commercial launch of the technology at the North American Spine meeting coming up in Chicago here in October.
Outstanding. Okay, so let's talk a little bit about the formation of the company in the background too, right? When you look at how you guys came to the point that you're at now, what was the growth formation and strategy leading up to what you did and how you developed your technology and what you're working on right now?
Sure. The organization started looking at the SI joint space and how these things were working. Recognition of the SI joint as a pain generator, something that could be addressed surgically, started to accelerate around 2010, 2011. Tenon was formed in 2012 with a novel technology. That technology received FDA clearance in 2018, and we've been in the middle of refinement and various work to get it ready for prime time, if you will, through the pandemic and things of that nature. And now we're really hitting the ground running hard. We've done a couple of rounds of funding and an IPO here in 2022 in March to really get ourselves ready to go aggressively into the commercialization of the technology.
Perfect. Okay, now talking about the commercialization of that tech, I know sometimes this space can be a little bit difficult to dissect for average investors, retail investors, right? There's a lot of detail that goes into what you're doing. I do believe we have a couple of decks pulled up that we can go through a couple of slides on if we want to pull those up. Anywhere specific you want to start so we can display this a little bit more?
Well, sure. If the group will bring up this slide 20, and I won't wear you out with slides, but this is really, if people can look at this, and I know it's a strange picture, but this is a scan, a CT scan, post-op CT scan of what the SI joint looks like. On the right is an untreated joint. You sort of see the line between the ilium and the sacrum. That is the joint, right? And it's a joint that doesn't move very much. It's not like an elbow or a shoulder or anything like that where there's a lot of motion. It's a relatively low motion joint. But if things start to break down, this will happen for a number of different reasons. Women in particular are susceptible post-pregnancy. If there's too much motion of that joint, it becomes extremely painful. And it manifests itself in buttock and upper hamstring pain, and it's very difficult on the patients. They describe things like jumping in the car, and after 5 minutes, it just feels like someone's, kind of putting a knife in your rear end, if you will. Very painful, very disruptive to normal life and activities. So on the left, you see our catamaran device, the bright component of the image here. That device is placed inside the joint. It transfixes the joint. So there's a pontoon, if you will, in the ilium and a pontoon in the sacrum with a bridge. And when we drill holes to put the implant in, we harvest the bone graft from the patient, fill the implant with that bone graft. This creates a fusion bed, if you will, with our desire to not just have the implant taking all of that load, but actually have the patient's body heal in a fusion format and lock that joint down so that unneeded motion goes away and subsequently the patient's pain goes away. Our technology is distinct in a number of different ways. It's a very unique implant. It's also put in via a unique approach that's very different from what our competitors are doing. So, of course, physicians are looking for distinction. They're looking for a better, more efficient way to treat their patients. And we're really excited. We think we have just that. We're anxious to get this launch going, and really encouraged by the early signs we're seeing in our early clinical experience.
Outstanding. Okay, so we've got a little bit of the technical background now, and that slide is really helpful for at least giving us some context and understanding what exactly this is. But let's look down the road to the revenue side of things, the sales side of things. How big do you see your addressable market being inside the next 5 years? Potential growth. How big do you see that opportunity being?
You bet. It's great. The word I used before was recognition. In the year 2000, 2005, anywhere in that range, the SI space was not a space of discussion. It just really wasn't in the consideration in the surgical community. By 2010, 2012, et cetera, that really started to change. And physicians started to realize, hey, look, they treat radicular pain that shoots down the leg. They do it all the time. Sometimes I had these patients that didn't have true radiculopathy, but they were very, very uncomfortable, had this specific pain. And now we're realizing that a significant part of low back pain, upper extremity pain, et cetera, can be attributable to the SI joint. So what's happening is recognition's expanding dramatically. There's lots of projections around, as you would expect. This is about a $300 million market now. There are independent projections that could grow north of 600 million by 2026, 2027, and that's driven by that recognition we talked about. So we're excited because we have a distinct solution, and we're excited because it's a space that's expanding pretty dramatically, with CAGRs in the 18% range here in the coming years. And so our challenge as a small organization is to establish understanding of our story and our technology, get physicians trained. And of course, there's nothing more powerful in the medical device community than physicians speaking to other physicians. I can create all the most beautiful literature in the world and what have you, but when physicians talk with each other and say, hey, look, this stuff is easy to use, works well, et cetera, that's the most powerful thing we can create in the surgeon community.
Absolutely. And when you're talking about the surgeon community, let's look at the investor community too, right? Because again, we have a very retail investor focused audience. And a lot of what you're working on, again, like I said, may be difficult to dissect. And you've done a great job of breaking it down. But if you're talking specifically to retail investors, right, what should they have their eyes on when you're looking at the future of the company over the next couple of quarters, next couple of years? Why is what you're doing so impactful, and why does it matter so much from an investor's perspective?
Well, I think the most important part is that positioning within an expanding and growing market. I think if I was an investor, that's what I'd be looking at most carefully. Hey, look, are these guys getting acceptance in this space, and are they getting a big piece of that growth? Right? We have to compel physicians with unique technology that either makes their life easier or makes it better for their patients, one or the other. And if we start proving that, and the adoption rates start to expand, et cetera, I think investors can be assured that this is a market that's expanding very quickly. So I want to go and convert competitive business, but I also want my piece of that expansion that's going on. And so if I was a retail investor, that's what I'd be keeping my eyes on. Is this company executing, and are they getting a piece of that pie?
Absolutely. Makes a lot of sense. And another thing to keep an eye on too, I think when you're looking at your second quarter earnings report, which we looked through for a couple of items that we found to be of interest, but revenue in the second quarter of 2022, it increased 514% from the same time last year. According to the report too, this was a 433% increase in the number of surgical procedures in which the catamaran system was used. Can you talk a little bit more about why the catamaran system was so impactful? But do you see this trend continuing too into the next couple of quarters? Do you see the revenue continuing on that trend?
Well, certainly. The window of time that you're referring to, Michael, is sort of our pre-launch activity. These were the physicians that helped us refine the technology and get it prepared for prime time, if you will. And as they started to ramp up their use, et cetera, we continued to watch very carefully to make sure the technology is delivering on its promises inside the operating room. Now we're very comfortable that's happening. And as I mentioned, we'll move into the North American Spine meeting here in October and go into full commercial launch mode, where we're aggressively telling our story, compelling physicians into a training environment, showing them the technology, putting it in their hands, etc. And so, yes, this is our window. This is our time to tell our story and to really start growing this thing incrementally. And that's what we're most excited about. We think we have a fantastic story to tell, and we're looking forward to going to the big meeting, having a presence there, and start to become a factor in this space.
Excellent. And I know you've talked about, obviously you guys have a great story to tell, and it sounds like you're pretty differentiated in what you're doing. But is there any other competition in your space, in your sector? Anybody else that's doing something similar to you guys? And how do you feel your position throughout the industry?
Yeah, of course, it is an active space. The leader in the space is SI-BONE, which is a public company. So folks can do their research on SI-BONE. And to their credit, SI-BONE were the first into the space that really started changing that recognition dynamic out there of the SI space being a pain generator. Since that time, a number of different technologies have come out, both lateral technologies that mimic what SI-BONE's doing, and also posterior technologies. What we're excited about is we're very unique and distinct. We're coming at the joint in a different way, what we refer to as inferior posterior, and as the physician works up a patient, one of the steps that they do for both treatment and diagnostics is an SI joint injection. And they take this specific pathway that's inferior posterior. We mimic that exact pathway. So the physicians understand it. They've seen it. They've seen the imaging required to put a needle in the joint, etc. We're following that exact same pathway, but doing so with a fusion protocol, if you will, to prep the joint appropriately, to fixate it, to graft it, which are all critical aspects of an authentic fusion or arthrodesis, as the physician's terminology goes. So that distinction is what resonates with physicians, because they do fusions all up and down the spine, right? When you sit down with a physician and you say, hey, look, let's talk about what it takes to fuse the SI joint, they get what you're talking about. They know they have to prep it, fixate it, graft it in order to get an authentic fusion. And this is our story. We use this known approach. That's going to be our distinction, and if you will, our separation from the other competitors in the space right now.
Terrific. Okay, and then take us through the cash position of the company too, right? As we're looking ahead, again, referencing your earnings report, you talked about how you're in a strong position to continue hiring personnel, continue developing what you're working on. How do you feel you look as far as positioning when it comes to cash for the next few quarters and moving into next year to continue working on what you're working on?
Sure. The IPO allowed us to solidify our cash position and really continue to invest in the business. Those three areas of investments are very simple, right? One is commercial expansion. We do a launch. We're building marketing, sales, personnel, training personnel, and what have you. The second is clinical research. We have some good, solid clinical data from our Alpha series in pre-launch, and now we'll move into enrolling a feasibility trial that'll start here in the fall to bring even higher levels of evidence into the discussion to prove that our technology is delivering on its promise. We have the cash, and you saw in Q2 approximately $16 million in cash on hand to invest in our business in those key areas and position ourselves for growth going forward. The organization's in a good position to do so well into 2023, and we feel very strongly that we've got ourselves squared away from a cash perspective right now.
Terrific. Okay, and then one last thing to kind of look at with you as we take a broader look at the economy and the market and the industry that you're into as we start to close out here. But how do you feel that your industry as a whole is looking in terms of market growth and opportunity over the next couple of years? Obviously, like you said, very active industry, very active sector that you're in. But where do you see the biggest opportunities and also the biggest vulnerabilities and threats to companies throughout your sector when you're looking at your industry from a macro perspective?
Sure. It's a very innovative world. These physicians demand better solutions every day. Our life cycles are relatively short. You have to be on the ball, and you have to be getting after the innovation component to satisfy their desires and their needs. They're always looking for a faster, more efficient, better way to get things done. It's good for their institutions. It's good for their patients. It's good for them. So that's a big thing. Look, threats. Healthcare has a cost pressure that every medical device company needs to be very aware of. The reimbursement environment and everything tied to the cost of healthcare is a critical issue. And so every medical device company has to be aware, look, innovation's great, but you have to weigh the cost of those innovations. You have to make sure you're bringing value to the table across the board, not just new and cool stuff for the surgeons to use. So look, the innovation horsepower in medical device is really high. We work very closely with our physician partners because they have to tell us what they need and want, not just from an implant perspective, but from an instrument perspective. So the communication lines and the relationships are really intense. The timelines are tight, but it's a wonderful opportunity to continue to bring value to the table. We have to do so in a cost-aware manner. So the institutes where these procedures are happening are satisfied, and the physicians are satisfied. It's an interesting environment because we have multiple customers. We have to keep the hospital or the ASC happy. We have to keep the physician happy. We have to keep the nurses happy that are using the technology in the OR. So we have to be very aware of all those aspects.
100%. You've done a wonderful job breaking everything down for us today. Again, like I said, I think sometimes it's a thorny topic to dissect for retail investors because what you're doing is so technical and so in the weeds, but it's so valuable at the same time, and it's going to make such a big change. Having it broken down into an understandable kind of dialogue is huge, and I think you did a wonderful job with that. Steve Foster, absolute pleasure to have you here today.
Thanks, Michael. I enjoyed it. Appreciate it.
Wonderful to have you here. Steve Foster, CEO and President of TNON Medical, traded on the NASDAQ as TNON. We're going to go back to our original guest at the 9:40 time slot. We had to switch some things around, some scheduling errors between the Central Time and the Eastern Time. That does happen to us every now and again. Now we're going to go back. We're going to bring on Marc Bell, CEO of Terran Orbital, as our next guest. Marc, thanks for joining us. How are you?
Thank you for having me today.
Absolute pleasure to have you here, Marc. Give us an introduction to Terran Orbital. Tell us where you're coming from, where you're joining us from today, and what's the company all about?
Sure. So Terran Orbital is the last independent manufacturer of small sats based here in the United States. We provide an end-to-end solution, meaning we design, build, engineer, do launch integration. We own our own ground station network and mission operations, helping the satellites complete the missions up in orbit. Predominantly, we build satellites for the U.S. government, for the DoD and the intelligence community. We build a lot of satellites for NASA and some commercial constellations as well. We have some great missions going on right now. We have a satellite called Capstone, which is on its way to the moon to provide a permanent moon communications network back to Earth for when we want to have a permanent moon presence. And we have a satellite that's about to launch on Artemis, that big rocket sitting at NASA, and called Loon IR, which will be mapping the dark side of the moon. In addition, we are helping SDA, the Space Development Agency, build what's called their transport layer. We won Tranche 0 and Tranche 1, and we are that's basically going to be, think of it as the Internet of Space for the Space Force. It'll be the communications network that satellites will connect into to communicate back to Earth in near real time.
Amazing. Okay, good recap. So now that we know that, I know you mentioned that the U.S. government is one of your biggest clients. You guys work with the government providing the products that you do. Talk a little bit about the rest of your market too, right? Is there anybody else that's leveraging your products and your services and the things that you guys are building?
No, I mean, we're very focused on the U.S. military market. We have a deal with Lockheed Martin, a strategic cooperation agreement that we just extended through 2031, where we build satellites up to 500 kilograms for Lockheed Martin. And as you know, Lockheed Martin is the world's largest defense contractor. And we are, people come to us with problems, and we give them solutions from space. We're very different than most space companies you probably hear about or see about, whereas they're building constellations and hope customers will come. We get hired to build satellites. The customer comes to us to solve a problem. So we have no risk in terms of our customer base, no risk. We have no risk in terms of credit, or de minimis risk in terms of credit, I should say. We have over $200 million of backlog That's satellites waiting to get out the door. We have about 70 satellites or so on our production line right now, and we have a pipeline of over $16 billion of future contracts that we're working on. And as we open up new factories, which we're busily doing, and new facilities, we are looking to expanding our revenue base.
Outstanding. Okay, that's all very, very exciting. And you may have mentioned this before too, but I want to clarify this. What's the timeline to actually put together one of these satellites, one of the products that you produce? How long does that process take, start to finish?
So we're the folks who invented the CubeSat. So the CubeSat is a satellite about this big. We did it 13 years ago, and we revolutionized space. We created this whole industry in low Earth orbit. Everybody from Starlink to Spire to Black Sky to Planet wouldn't be doing what they're doing if it wasn't for us. And so what used to cost billions now costs millions. So for example, a satellite that would cost $1 billion years ago, we could do for $10 million today. What used to take 10 years to do, we could do in 18 to 24 months. So we've dramatically shrunk the timeline. So current technology goes into orbit. And people also don't realize that, yes, we are a manufacturing business, but it's a recurring revenue business. And what I mean by that is, our satellites are only designed to last 5 years. That's why they're so inexpensive. So they have to be replaced every 5 years. And by replacing the satellites every 5 years, it becomes a recurring revenue stream down the road for us, as people always want the most current technology in orbit.
Got it. Okay, interesting. So let's talk about the growth strategy moving forward. I know you already mentioned you have $16 billion in the pipeline for future contracts and other work that you already have coming down the pike. But let's talk about the growth strategy for Terran Orbital as a business. Are you scaling internally, scaling on the revenue side? Where are your priorities in terms of key growth for the business as a whole?
Our priorities right now are adding more factories, adding more production capabilities, adding more people. I mean, we are increasing our headcount by about 10% a month. And people are the most important part of our business, and we continue to hire the best and the brightest from around the country. We are adding. We are running at 100% of capacity right now, and as we get more facilities, we see us continuing to hit that 100% ceiling for the next few years. It's amazing. The U.S. government says 50,000 satellites are going to be built and launched in the next 10 years, and we always say, well, somebody's got to build them. And we have a cost structure because we're doing a lot of robotics, we're doing a lot of automation, and so we're able to keep our cost structure low and our productivity high. So the goal is always to continue to increase the functionality of satellites while decreasing the cost of them going forward.
Got it. Okay, so let's also talk a little bit more about the satellites that you guys produce. Again, you said you're very focused on the U.S. military, you're focused on the government. Are there other applications in the civilian sector, in maybe a different sector other than just the governments and what they're using for projects there?
Sure. I mean, the way we look at our business is we build the bus. So we build, think of it as like a Chevy, the Chevy Suburban, the GMC Yukon, and the Cadillac Escalade are all built on the same platform. That platform is what we would call a bus. So we're a bus manufacturer, and we're payload agnostic. I mean, whatever you put on top of it, whether it be electro-optical imaging, which would take pictures of the Earth, whether it would be synthetic aperture radar that you can see through imaging through clouds and through buildings and through objects, image at night, whether it be Internet of Things, 5G, we are payload. We'll do whatever the customer wants in terms of a payload. But our bread and butter is building the buses and building them in mass, and then we let the customer decide what extra options, like buying a car, what options you want to put on top of it.
Outstanding. Okay, I think that's a really good analogy that makes it a lot easier to understand. I think that's a great breakdown. So let's also talk then about the cash position of the company, right? The financing side of it. How are you guys positioned in terms of cash for growth, for development, for continuing to work on new products?
We're doing great. We ended last quarter with over $60 million of cash. We have, $220 million of backlog. So that's guaranteed revenue that comes in as we deliver product, we get paid. So we feel pretty good about where we are right now.
Excellent. Okay, and then again, from a retail investor perspective, we mentioned this several times already this morning with our other guests, but from a retail investor's perspective, what's most exciting about Terran Orbital? You've already given us plenty of exciting items, obviously, with what you guys have in the pipeline and what you're working on. But from an investor's perspective, when you look at the company's growth and potential, what's most exciting to keep an eye on over the next few quarters, next few years?
What we try to do is explain, space is becoming an asset class, right? And within that asset class, you have launch, you have constellations, but we're the only person in the manufacturing bucket. So we're the only publicly traded manufacturer of small sats. There is nobody else in our space. We're competing against all the big primes, whether it be Boeing, Northrop, Raytheon, L3, but we're also finding ways to partner with all these people. So like our partnership with Lockheed Martin has been spectacular. They've been a great partner. We're doing a lot of great programs with them. And on the commercial side, we could do a lot of work. But we joke, the U.S. government, I mean, granted, they're not a AAA credit anymore, they're 2.5 plus, but that's good enough for us. And but we do satellites. We've done satellites in the past for EchoStar, so we'll do it for high credit-worthy customers. And we do, and the NASA work is great as well. I mean, we the intellectual things that we do for NASA, like CPOD, was 2 satellites we launched earlier this year, which we'll be using. They'll be the most sophisticated satellites in space. They're driven totally by AI, and they're going to dock or find each other and dock autonomously in space on their own. And that'll be a first. And so it's very exciting, all the things we have going on. And so the retail investor, as you look at your bucket of things to invest in, as you diversify, we are the only player in the industry we're in that's public so far.
Got it. And I want to talk a little bit more about Capstone too, right? You gave us a brief recap of Capstone earlier, but give us a little more detail on why this is so exciting. And when this goes well and when this works too, what is this going to mean in terms of next steps for Terran Orbital?
So Capstone is the first on many levels. It is using so to get to the moon, usually it's a 6-day trip. We're taking the slow boat because it's a very small satellite, and it's the size of a small refrigerator. And so there's not a lot of fuel on board. So we calculated the gravity between the Earth, the moon, and the sun, and we're using gravity to propel it to the moon, which is a first. So it's an amazing technological feat that we pulled off. And we did this with Advanced Space and NASA, another company called Advanced Space. And then it'll be in a very large elliptical orbit around the moon. So the goals will be a constellation of them. So when we have a moon station and a moon base, it'll always have connectivity for communications back to Earth. And that's very important, that they're always online with Earth. And this will be the first. This is a demonstrator that'll prove that we could do it, and then hopefully later on we'll build the constellation for this. So the goal is to go to the moon and then go to Mars after that. And this is a stepping stone to Mars.
Got it. Now, timeline for that. Do you think there's any sort of realistic time frame we can look at in terms of when that's going to be doable, when it's going to be possible? Do you already have a number for that in your head?
For going to Mars or going
to Mars, right?
I have no. I'll let Elon answer that question.
Could be a while, right? We'll see. We'll see how doable that is. But other than that, right? Let's also talk about just the next couple of quarters specifically in terms of growth for you guys. You've given a lot of plans already for what you're working on, what's in the pipeline, other products and stuff like that. But what are your priorities for early 2023 that investors should be looking at?
I mean, really, for us, it's a new manufacturing space coming online. I mean, we have the backlog, we have the pipeline. We just need the capacity to build. I mean, we're doing an amazing job getting stuff out the door in our existing facilities, but we've added a quarter million square feet of space over the past year. We will probably continue at that rate every year, adding more space. And as we add more space, everything else is easy. We continue to build our own more and more of our own components. We build our own star trackers, our own reaction wheels, all the things that go in a satellite. 85% of what goes inside the satellite, we manufacture ourselves, because supply chain, of course, everyone's talking about. And so the more we could do ourselves, the less risk we have on supply chain.
Got it. Okay, interesting. Can you talk a little bit about the shareholder profile for Terran Orbital too? Is there a certain type of investor that communicates best with Terran Orbital, understands the company best? Can you give us anything on the shareholder side of the company that makes the most sense?
Obviously, space savvy shareholders are great. Any Star Trek fan is great. As our stock symbol is LLAP, but we're trying very hard to, it's a hard industry to get your arms around, because you have a lot of companies out there that probably shouldn't have gone public, that did go public in our sector, and they have business plans that are hard to understand. Ours is very simple. We are a bricks and mortar high tech company. And I know it's an oxymoron, but we are, we build the satellite, the infrastructure to enable everybody else to do what they want to do in space. And companies like us, like Lockheed Martin's been doing it for 60 years. to companies like ours tend to have a very long shelf life and a very good business because our customer, you have the U.S. government, but you have more and more companies trying to build constellations. Some of them will succeed, some of them won't. So we try to only pick on the ones to take on as customers that we believe will succeed. And as a very active venture investor in space, we're always looking for companies that will, become profitable. We're not trying to mine asteroids. We're not trying to do crazy stuff. We're focusing on simple stuff: internet access, telephony, imaging of the Earth, and high resolution at a lower cost. What happened in Ukraine put a lot of attention on imaging and intelligence from space, and that's given a lot of people a big push to build more assets to be able to image through clouds. You could see your building on a clear sunny day wherever you are with Google Maps or Google Earth, but you can't see it at night, and you can't see it through the rain when it's cloudy out. We can, and we have technologies to do that. So we're pretty well positioned, we feel.
That's great. And I'm really glad you just brought that up, right? Because that was actually the next question I was going to ask you. There was a really good interview that you did with Yahoo Finance about 6 months ago about satellite imagery and the future of space. And that's a little bit more on the technical side. But can you give us your thoughts, too, on how the government may affect the way that satellite imagery is going to be done, how the way that we're going to be able to move it forward, and where you see the space going as a whole over the next couple of years?
Sure. So there's a technology called synthetic aperture radar that I never heard of until a year ago, and I'm sure no one else on this video has heard of it before, but it's very important because it uses a radar wave to transmit, to bounce off the Earth, and that radar wave creates a 3D image of what it saw on the ground. So it allows you to see at night, it allows you to see through the clouds, and you're seeing adoption now as the government issues more and more RFPs to learn more information about it. They've been doing SAR for 50 years, but it's always been classified. No one knows how many satellites the U.S. government has. But now the commercial is getting into it, and the Ukraine conflict has really shown the importance. Whereas as Ukraine is a breadbasket of Europe, it's always raining, it's always cloudy, and they needed intelligence, and the only way to get that intelligence was with synthetic aperture radar, and it goes even further because it's called software defined synthetic aperture radar, meaning as long as we know the chemical composition of an object, we can extract it from the image and see what's behind it. So it really gives an incredible amount of intelligence of what's sitting on the ground, or you can look for a certain chemical composition on the ground. It's because it's radar, just like an FM radio can penetrate the walls of your home. It's the same way with SAR. It can penetrate the walls of a building.
That's really exciting. Okay, got it. So with a couple of insights there then too, you mentioned this again with Ukraine and everything else. Do you see that situation more heavily affecting satellite imagery moving forward? You've touched on it a bit already, but do you see this more deeply affecting the way that satellite imagery is going to be portrayed and understood?
I believe it has given Congress and the president a greater understanding of the importance of imagery and intelligence from space. Because listen, you can't fly drones over China, you can't fly drones over Russia or North Korea, but we can fly satellites. And intelligence is important because intelligence also gets you security. And intelligence, if you think about how we go ahead and with Russia and we verify each other's nuclear weapons to make sure, as we did a Nuclear Reduction Act years ago, it was all about trust. And so by everybody being able to see and know what's going on, you have less likely chances of conflicts going forward.
Got it. Makes a lot of sense there. Okay, so another thing we also wanted to cover too is your latest earnings report too. Can you give us any highlights from that earnings report? Anything that stood out to you and you think investors should be looking at?
I mean, we were 24 months ago, we were a tiny little company. We were doing a little over $20 million a year with maybe a $10 million backlog. We continue to hit record revenues. We continue to grow at a very rapid rate. People will see our gross profit margins, which turn negative as we started expanding rapidly, start to turn positive. People will see our EBITDA, which turned negative, start to turn positive. Because as we scale, we're spending a lot of money and a lot of resources building ahead of programs, because that's kind of how you do this. You can't start building and hiring when you get a program, then it's too late. So we're spending a lot of time building infrastructure that will pay immense dividends down the road.
Got it. No, obviously planning ahead for the future is important, right? And when you look at, your role as CEO and chairman and co-founder of Terran Orbital, obviously, when you're moving ahead and you're looking at where you need to invest your assets, where you need to invest your time and your capital and everything else, what do you think the most important parts of your business are? You mentioned manufacturing earlier, the fact that you're going to get more space up and running, but are there other parts of the business that you think are important to focus on as well?
Well, most importantly, it's our people. I mean, we are hiring the best and brightest engineers from around the country: electrical, mechanical, structural, thermal, aerospace, system engineers, computer programmers. We are the sum of all the people we have, and it wasn't for them, great people that we have working for us, we would have nothing. So people really make up our business. The assembly part and the manufacturing part, that's secondary to all our great people.
Got it. And in a larger macro look here, as we start to close things out too, when you're looking at your business and your industry, are there any larger threats on the horizon that you see in terms of inflation, our larger market, our economy, which obviously we've got a lot of different factors up in the air right now, but is there anything that you see on the horizon in terms of the macro economy in the US that worries you when it comes to Terran Orbital that you think you guys will have to overcome?
We're very lucky. We are the National Defense Authorization Act, which is what the act that funds the DoD and the IC, has been near unanimously voted on by Republicans and Democrats for over 60 years. And we are in a recession-proof business. You're not going to see Congress cutting the Defense Department's budget by 50% with 36 conflict zones around the planet right now. With China becoming more and more aggressive, Russia becoming more aggressive, you're not going to see cuts. So we feel like we're in a very safe place from an economic standpoint, from an interest rate standpoint, which really doesn't impact our business.
Got it. Okay, well, Marc, this has all been very exciting. You gave us a ton of information in a very short amount of time. I'm sure there's a lot more detail we could go into, but as of right now, the future of your company looks incredibly auspicious, and Terran Orbital obviously has a lot to come in front of it. Marc Bell, thank you so much for joining us.
Thank you very much for having me. I appreciate it.
Pleasure to have you. Marc Bell, CEO of Terran Orbital, traded on the New York Stock Exchange as LLAP. Live long and prosper. We do have a gap before we're moving into our latest presentation at, I believe, 10:40 or maybe 11 o'clock later this morning. So we are going to bring on Mitch, I believe, as long as he's here in the studio with us, for a quick gap to cover the markets and the trades and everything else that we're seeing going on this morning before we bring on the CEO of Arrived Homes, which is actually going to be really interesting. A lot of stuff going on in the alternative investment market right now, specifically for real estate. So Ryan Frazier is going to join us around 11 o'clock. But in the meantime, we're going to bring on Mitch. He's going to give us an update on the markets as long as he's here and with us. I do see him in the studio. Mitchell,
what's going on? Tough markets, definitely. Getting a little bit of a bounce back. We'll see if it's short-lived or will it kind of hang on today. But it's been a tough market, that's for sure.
Tough market. Rough day yesterday, though, too. We were traveling out of Chicago for our conference, quite a few of the team members, and all of us were just kind of sitting there looking at the market dropping 1,000 points, and we're like, this is one of the most brutal days we've had in a while. That was a tough one.
Yeah, it was definitely a big drop. I was looking for a move towards the support of around 388. I didn't expect to wake up today and be down towards 383. That's definitely a huge drop, but there are some stocks that are starting to bounce back. I'll talk a little bit about what sectors and industries are moving, but let's go ahead. Let's dive on in. I'll bring you back in a second, Michael. You can go ahead and take a little bit of a break. Go get some orange juice. I always love some orange juice. Pinky on up.
Take the reins, Mitch. We'll see you in a bit. Appreciate you.
Let's dive on in, guys. Of course, if you guys have a stock or anything that you guys want to call it out in the chat. I'll make sure that I got a little YouTube open. I have it right over here. So any tickers you guys want to take a look at today, definitely go ahead and put it up. But first things first, let's get into the market and take a look at what I'm looking out there. So here I'll share my charts here so that you guys can see some. All right, let's take a look here. Of course, I like to do the sector analysis here with my charting service. Let's take a look. The communication services is actually up. What's up here? Well, let's take a look at some of the leaders, right? That's what I always try to take a look at. And you guys can see there's some that are bouncing back today. And an easy way to kind of take a look at that is change from the open. I don't even have change for the open for the stocks right now, but definitely you could see it right now. Let's go towards the 15-minute. Verizon getting some lift. T-Mobile getting AT&T getting some lift. TMUS, T-Mobile getting that one's a little bit down. I've been seeing that one start to break, but VZ and AT&T are definitely kind of income targets. And so it doesn't seem bad to see those kind of getting a little bit of a bounce. They're mainly used for dividend plays. Would have to take a look at the ex-dividend date. Of course, you guys can check that out on Benzinga Pro with the calendar widget. Now let's go ahead. Let's keep going. Let's take a look at what's down the most right now is actually energy. Oil definitely getting hit hard. XOM down there towards 93s. We're going to see if they can bounce. They got a little bit of a bounce, but it has not been looking good here. Even for Oxy turning around, I was looking for a move towards 70. It's not looking good there on the oil names. And also healthcare turning around today. Healthcare plans were really strong yesterday and really quickly giving up a lot of the gains here. Kind of CVS, those kind of stocks pulling back a little bit, but we'll see if they can catch a dip and then get a little bit more pushed up. United Health is one that definitely keep it on watch, right? Humana gave the news yesterday, but UNH was one of the strongest moves yesterday. As you can see when it was pushing towards 530, we'll see if it can catch this kind of downside action and catch some bounce. Another one that I was looking at is ELV, keeping this one on my radar to get back through 490s. We'll see if that can do that move. Utilities getting a little bit of a bounce back. Duke, I was looking at this in the pre-market prep. Hope you guys were able to catch that. But I see some stocks being brought up here. Let's go ahead. Let's get into some of these stocks that you guys are bringing on up. Looks like you guys are playing some of the big movers like usual. I see Kalu mentioning some of the bigger movers, like that AMTD. Of course, guys, full disclosure, kind of a smaller stock. Not really making moves, though, today. So let's take a look at something else that is making moves. How did FDX do from the open? FedEx, it got a little bit of a bounce, now coming back down. So I'd be looking for this to kind of cut right back down towards 155 if I was taking a trade on this. But who knows? Right now, UPS was bouncing back. And you can see it's deep into the green from the open. Now, will it come back for those pre-market lows? We'll see what happens there. Let's keep going here as we keep looking. This was another stock that got hit hard with the FDX news, XPO. So XPO Logistics is actually looking a little bit better than at FedEx, right? FedEx still looks like the weakest one. It did get a bounce, but could get right back down towards the support. And let's take a look at the overall market, right? Where we're at right now. We're near towards those 385s. What should we be looking for? Well, let's take a look at the pre-market highs and see what kind of charting we can look here. When we first came down in the morning around 405, we were looking at a resistance around 385.50. We got above it for a little bit there around 7 a.m., getting to 386.10. And so we could put another level there. And then now we're looking at where we could find that resistance, right? Are we going to turn around near those 385s, or are we going to push through that coming back towards the 390s today? Of course, take a look at your leadership, right? The biggest stocks that are traded in the SPY. Let's take a look at Apple. Apple down today, hasn't gotten back above the VWAP. The VWAP for me, guys, is this orange line. And then this yellow line that you see here are some moving averages. But definitely Apple not getting back up there, and it's starting to cut through the 150. This is not looking good. It was bouncing back a significant amount, got back up there to 175 in a hurry, but now we're starting to break through some other supports here, and we can start heading right back down there towards those kind of June lows. I don't want to see Apple get down that far, but because that would be kind of like an 8% move down, but it doesn't look good today for Apple. We'll see if it's able to get back above the VWAP and start holding here. One of the stocks that I've been warning on is Microsoft. And why we're warning on Microsoft is because if you take a look at the weekly trend is starting to break. These are bigger time frame trends. And when they break, they usually have a tendency of following through a significant amount. And you guys can see it here. We're starting to break through. We had a really bad day yesterday where we closed down to 243. We need a 250 recovery on Microsoft, and we expect to see it back up. What do institutions need to make their buys after this expiration? Well, Sabrina, maybe explain a little bit more. I know that you're talking about the quad witch, but what it usually is just a rebalancing, right? And so that's why you normally get fireworks out the open. And we did get a little bit of fireworks. It started coming back up, but we'll see what happens in the stocks overall. Google is the one that's kind of holding up above the VWAP. If you wanted to look at one of the ones that isn't looking as bad, is Google. Amazon trying to hold VWAP now. We'll see if that is able to hold. If not, it could come back and take out that 121. Tesla being red is a little bit of a concern. This was the stock that I actually said, at least on the daily charts, looked like the best one from the bigger kind of the leadership. And now it's pulling back. I'll look for a 293.50 area to kind of hold, which is a 200-day moving average. We'll see if anyone is able to step up there and Tesla hold on. Google's been pulling back. UNH, we just talked about that. This is one that I would be looking for that upside move. And it's continued. Look at it here. Nice little pattern here on the 5-minute chart here. You got a little kind of pennant, and you got also kind of a horizontal line here that is holding. Let's see if it takes that next leg up through towards the 524s, but not a bad area to keep watch is those healthcare names. So UNH coming back here. Let's see if CVS can come back. ELV, you got Cigna Corp looking like it's trying to push on up also. These are not bad plays to watch right now. I've also was watching this Molina Health. It has pulled back significant. Let's see if it comes back up and tries to get through the 350s. All right, if you guys got tickers, you guys can keep throwing them up. If not, I'll just keep going through the market. And of course, I can give you guys kind of some of the plays that I'm trying to play right now. You guys know I'm in a competition account. I added to my target position this morning on that bounce. And I'm a little worried because I didn't want to break the 162. Really, risk should here, at least for me on my competition, is towards 161.50s. But Target showing a little bit of strength there. I'd look for Walmart to have a good day today also. Bounce back a little bit, right? We're looking for these to get back up and try to clear some of their gap space. Same thing for Target. Will we get back on up there going towards the 170? That's one that is on my radar. Also watching Dollar Tree, right? It has a nice bottoming around 135. Is this going to come back? Especially with the high inflation time, I think that the dollar stores should do better, even though they have been struggling. DG's the better one of the two. That one's at least holding some support a little bit closer towards the resistance, but the higher kind of risk, the lower risk to reward is with DG, but the higher risk to reward trade would be DLTR, which of course is the Dollar Tree. All right, I see some other ones mentioned here. I see Blink mentioned in the chat. And why we're charging stocks moving. Well, a lot of that was based on President Biden's comments. And of course, the infrastructure that is going to be built up. The question is, how long will it take to really kind of show up here for the revenues for these companies? I feel like this is trying to come back. It doesn't look bad. And I think we're going to get some more sideways action here on a lot of these names, like even ChargePoint. I could expect some sideways action. If it breaks 15, that would not be good. Like for ChargePoint or for Blink, I would expect if it breaks like 18 for Blink, that would not be good. But I would expect to see some sideways action. Sideways action is actually going to be a good thing here on the monthly, eventually getting through that 25 level. And then you can start making a run towards the kind of the monthly trend line. And you can see here, it doesn't look too bad there. You know, you're trying to make your move back there. I would look for that breakout eventually. Blink charging will be definitely one on my radar. All right, let's keep going. Google close to 100. Got to love buying some, at least average in. Yeah, there's nothing wrong with that, you know, but the question is, where does Google stop if it breaks that 100? That would be the next level down on the monthlies. You could see maybe 92s. And then from there, I could see around 82s. So if you're looking to average in, one thing that I like to do is start thinking, okay, so what are my levels that I'm looking at averaging in, dollar cost average? Am I waiting for the 100 break going to 92? Or am I waiting for that 92 going towards that 82? Always up to you to determine. And maybe you're doing it in different amounts. One of the things that I always remind investors is that if you have free commissions, you don't got to put in all your order in one order. I think this is where a lot of retail kind of just got used to putting orders in one order, and they don't use kind of smaller orders to kind of better their average, maybe leveling the orders in there so that when you're getting hit on those kind of down movements, there you got a little better average than putting it all in at kind of a higher price and seeing this price just swoosh down below it. then come back on up. After that, it's 88.65 on the monthlies. Yeah, I mean, I see it coming down there, and that's the only question. Will Google be able to kind of reverse out of this? And this is why I'm scared about Microsoft, right? Microsoft and Google trade very closely, and this one looks like it's starting to crack and heading down here. We'll see what happens there. And you saw what happened to Adobe. Adobe got destroyed yesterday from a pre-announcement, and it's down there towards 297, getting a little bit of a bounce, but definitely got hit hard. Let's take a look at the Qs. The Qs are starting to kind of hold their little bounce here, and so is the SPY. We're getting up towards those resistance, the 385s, and a lot of this is from the pre-market action. So let's see what happens if that pre-market action holds, or will you get some continued downside? What's into the green? Well, let's take a quick look and a reassessment here. Utilities is actually not even in the green anymore, so it's trouble right now. It's definitely not the easiest trade. If we take a look here, it looks like some pharmaceutical retailers are up, like Walgreens Boots Alliance. You also got L-Fly here. Is Rad up? No, it's just a couple here. It's just WBA that's leading it a little bit there. Just looking for some relative strength. There sometimes is, sometimes isn't. All right, so silver is actually having a good time today. What that shows me is probably the dollar index down a little bit here. Let me just take a quick little peek at the dollar index, see how it's doing. It's up, but it's come down significantly since 9:50 a.m. towards right around now. It's started to cut through. So silver getting a little bit lift with that down move in the dollars. And you can see here at 10 a.m. is when this started cutting. And if you take a look at it, really when you started really breaking down was around that 10 a.m. right on the dollar index. And I use DXY, but you guys can check that out and always follow the dollar to see what happens. All right, let's keep going here. If you guys got stocks, you guys can definitely call them up. Semis went green. Yeah, I saw NVIDIA go green for a little while. Let's see if they're able to hold. These stocks are just really weak right now and could bounce back. I mean, there's no problem with them bouncing back. Will they be able to hold today by the end? The best one actually kind of pointing out kind of a more value play is Intel bouncing back today. This one actually looking a little bit stronger with that bounce back. I think, people are buying the dip a little bit today. Is this kind of the move that, I think is the best move? Honestly, it's tough to say because the FOMC meeting's still on the horizon next week. I don't know if we get down there towards the June lows already by next week. It could possibly happen. Who knows what's going to happen? Amazon, what's going on there? It looks like we're trying to get back above the VWAP. Apple finally starting to get back above the VWAP. Let's see if it's able to hold that. That's that orange line there. On any pullbacks, you can maybe get a slight tick down towards 149.80s, 149.75. But let's see if it takes out the opening price, 150.40. That's an important price to always see when the prices go back through. J&J doing what it does when things are bad. Getting a little bit of a lift. The drug manufacturers, I've been keeping these on my radars. One is kind of like Pfizer has been on my radar just because it has this bottoming here. And so if you see here long term, it does look like it's on a major support. The question is, can it even make a move back to 50? That's what I would have to question here, but it doesn't look too bad now that it's created another kind of support there around the 145.48. You can see we went to 145.50, so we can just round this up to 145.50, and we're looking for that to kind of hold as the support and start pushing back. If you're a bull, trying to get a move back towards 47 would be a good outlook for Pfizer. I know as a Seneca definitely was trying to get on up with their COVID news, and that's not really giving them the lift right now. Merck is up, but like you mentioned, Johnson & Johnson, not a bad one either. Take a look at the daily chart. I was looking at this one while it was in this price consolidation period, and it headed down towards the low on Tuesday, now starting to make its way back through the highs on that weekly consolidation. And you can see it here on more of the weekly. Once you get through that weekly, I'd look for that to start holding. So we can take a look at the 165.70s to hold now on any pullbacks. Doesn't look too bad there on the hourly. Let's see if it holds that on the hourly pullback right now around the 165.73 and doesn't cut back through 164. I put 20% of my 401k into J&J. Hey, well, Jim, doesn't look like too bad to have some money in Johnson & Johnson. All right, let's keep going. What else is going on here? Consumer defensives, not doing that well. Basic materials, technology, financial services. I mean, there's things that are bouncing back today. It's a kind of one of these days where you're just seeing rallying back. And a lot of what you're seeing is what? Stocks that look down, but really aren't down, because what happened is they got hit so hard overnight that they opened down. But from the open, we're starting to at least get some sectors back into the green here. Utilities back into the green, basic materials back into the green. And a lot of that was kind of gold. Is steel coming back here? Let's take a look here. NUE got some of the steel stocks coming back. Steel Dynamics gave good numbers yesterday after NUE gave really bad numbers in the week. And that's how it's been. It's a hard market to trade when you're getting mixed signals from different leaders in the industry. All right, just going to go ahead and take a look at some other names out there. If you guys got tickers, definitely throw them on up. I see Disney being brought up. Disney, let's take a look at Disney. It's getting a little bit of a bounce there. We wanted to hold the 100 on any pullback. It's been pulling back significant, but doesn't look too bad. Now it's holding the 50-day. 50 days around 109.09. So it looks like it's trying to hold right around here. Let's see if it can actually start making a move back. Netflix was one that was mentioned yesterday with the ratings. Let's see if this one can catch the kind of the dip after getting that ratings upgrade yesterday. It does look like it's trying to bounce a little bit. The question is, will it hold? And now it's looking like it wants to test this the VWAP one more time. We'll see if it holds there around the 230s or cuts to the 228. All right, let's keep going here. It's about 10:39. I'm going to keep going to 11. So got a lot to talk about, and let's just take a look at some of the trades on out there. Let's take a look at Tesla. Tesla going to come back into the green, because that's a good level to watch, right? Tesla was one of the charts that I really think looks pretty good here. If it can come back up through 300 today, we could get a nice little push on up there in Tesla. Let's see what happens now. It just pushed back to VWAP, trying to hold the VWAP pullback. VWAP is around 297.86. So not too bad when it goes to 297.83, right? And so a lot of people take a look at the VWAP, which is the volume weighted average price, as an indicator to determine where the average price on the day is being traded at, right? And so a lot of kind of institutionals will fill around that using an algorithm. So it's something to keep on watch. All right, Tesla. If Tesla's moving on up, I'll go ahead and I'll take a look at some auto manufacturers. Like, will Ford get the lift? And you can see it held the VWAP there. Let's see if Tesla really takes off through the 299, getting on up there to the 300. Up, and there you see it. Starting to push, getting up there to the 298, 78s. Can we get through the 299s and get through the 300? Let's see if we get it. Just gonna give it a second here and see if we can. Let's go to the one. Let's watch it on a kind of a closer time frame so we can see it kind of push on through. So you see it here. Like I talk about this often. When the stocks get above the VWAP, do they hold it on the pullback? You could see the stock went right back to the VWAP after pushing above it. It comes right back to the VWAP and then finds some bounce. See if it takes that next leg. I'll just keep going through some other automakers to see what they're doing. Ford now starting to come back a little bit. GM coming back a little bit. I saw Lucid was up. This looks to me like a short kind of squeeze type of stock play. Definitely was all the way down there towards 14. Now squeezing back there towards 1761. If this could get to 20, you guys know how I love to short this name, but we'll see what happens. Lucid is definitely pushing on up today, up about 6%. FSR also up today a good amount, 5.36%. We actually just talked about this on pre-market prep. I believe it was yesterday, with a ratings upgrade and looking into potentially Fisker running into the release of the Ocean. It's bottomed out here around 830s. This one looks interesting for me. Fisker trying to come back through 10. It's not a bad one to keep on your radar. All right, we'll see if GM and Ford can get into the green today. Ford has a nice little pullback there around the 38.2. It'll be right around holding this 1450 and then starting to bounce back. Looks like it held it right to the key, 1450, bounce back. All right, let's take a look back into the markets, and can we get through that 385.50? And you can see how we put a wick there. That's why I always like to look for closing. A lot of technical analysis and a lot of traders out there, they really pay attention to the first opening, like kind of tick, and they get stopped out a lot of the times because you'll get a wick through there. You don't get an actual close. And this is why it's important for me to pay attention to the closing of the candle, actually more than the opening of the candle, like the first drive. Because if it doesn't close up there, it could have just filled some supply, some demand, and then came right back down. And so we'll see what happens here on the SPY. Can it really hold the 386 push out? Because I think it would need to get above that 386 if we're going to continue to see this kind of up move out there. But let's go towards a 3-chart outlook now so that we can keep an eye on multiple stocks as they're going ahead and trying to make moves. Let's go to Apple here and see what happens on Apple, because if Apple comes and takes out the low, I would expect the SPY to do the same. And so this is how you use relationships a lot of the time to find what's going to happen. So now that we're getting the VWAP rejection here from the VWAP bounce on Apple, if it takes out this 148.50, I would expect to see the SPY kind of do the same. Even though the SPY is above the VWAP, it could play catch up if some of the major leaders can't hold on to their move. All right, NVIDIA strength and above yesterday's close. We see that Ready Trader 1. Now, the big thing is, will NVIDIA hold that? Because it does this move often, and it did it last time where you got a little bit of a spike here, right? And you went on up, you got on up there towards 1:27 p.m., and then boom, right back down there towards the low. So we'll see. If the trend can change, the trend can be your friend. Right now, it's been giving lower lows, lower lows, lower lows. And so until that trend changes, I'm staying away from it, but I can't blame you for looking at it, as it has been trying to get a little bounce. But the question is, can it hold these bounces and get on up to the next level? For me, that's a close above like 132.50. It'll be looking like it wants to kind of give that reversal candle on the bottom. We'll see if we get it there. All right, so SMG, green off June lows. All right, let's take a look. This one looks like, it's trying to get a little bit of a bounce back. But the only thing is for Scott's Miracle Grow is that, remember, this is what majority of the times, this is kind of also, they do like their services. They got some cannabis. But my big thing is this really the company that I would want to have in a kind of inflationary environment and a recession environment? I don't know about SMG. But that's just my personal opinion. Maybe I got it wrong here in Scott's. It's trying to get up there through 55 there. We'll see if it can continue moving. The 15-minute has been really strong since the open. Let's see if it can continue this kind of expansion on the MACD. You can see how it's so extended. It looks like it could pull back here to 53.50s, but it's tried to make a move back above 55. There's Apple heading down slowly towards the 149.50s. Will we get down there to the 148.50s and watch how the SPY will kind of play catch up here and try to get right back through the VWAP and head towards the low if you see Apple take out this low at 148.48. I would also watch kind of like FedEx to take out their lows, because that was the stock that really dragged the market, right? See if they take down FedEx even further, and then all of a sudden things start flipping to the downside. All right, SPY coming down there towards the VWAP almost already, and it's definitely declining with this Apple move. We'll see if Tesla also kind of gives up that kind of push that it just tried to do. It looks like it's fighting here at the VWAP, trying to get the next lift through 299, but can't right now. All right, this is 10:47. We're going towards 11. So do me the favor, if you guys are listening in on this and hanging out, let's get some likes on up. We got 44 likes. I'm hanging out here with you guys, trying to cover stocks that you guys like and take a look at the markets. So do me the favor, hit that thumbs on up, support us. Let's see if we can get to 75 likes before I get on out of here so that I can say I did my job today at Benzinga. Support me, guys. Hit that like. All right, so I can go over some kind of news stocks to see if any of these are kind of getting some lift. How did Uber trade after the hack? Well, it actually kind of got some up move. Wouldn't you expect it? Kind of an illogical move there in my eyes, but it's moving up with the market, right? And so if for any reason the market goes to take out those lows, watch out. Uber could be trying to take another leg down. It was impressive to me that an 18-year-old could hack Uber. That 18-year-old probably got a little bit of a future in some of the hackathons on out there. And that's probably what he should be using his hacking abilities. But hey, Uber definitely getting hit recently on that hack news. We just now got to wonder how bad of a hack really was it, because from what they were saying, and this came from Sam Curry, a security engineer at Yuga Labs. He said that they pretty much have full access to Uber. This is total compromise from what it looks like. That's pretty impressive if it was from an 18-year-old and hacking that. Now you're starting to see it come down a little bit. We'll take a look at how the market's doing. Did Apple get down there towards the 148.48s? As you're seeing the SPY come right back to VWAP. Be careful out there, team. Definitely seeing it come right back down. A lot of people probably selling the rips and probably buying some of the dips, but selling in the rips into those push. We'll see what happens. NVIDIA. What happens to NVIDIA now? Will it come back down through the lows? Those are concerning signs that I would just keep on watch. We'll see if that actually happens or not. Tesla back down below the VWAP. Fought there. Tried to get back above to the 299. Couldn't do it. Now right back down. Quick question off the top. If you have a minute, what trading platform do I use? So this is my charting platform. So there's mainly two things that I use, right? I'm going to use a charting platform. And the reason I use a charting platform is that it has, kind of more real-time access, more kind of patterns and kind of indicators that I can be using than using my Benzinga Pro. But what I usually do is that every morning I open up my Benzinga Pro. I take a look at the movers and then I'll look for the news. What's moving the stocks? Then I move into here to actually trade, to go ahead and have my charting. It's a little bit better. And a lot of that is also based on a lot of sector and industry analysis that I like to do. And I think that this is really where I have my edge, where I can stay with the rotations a lot of the time and try to catch them before they kind of give up a lot of their gains. So that's also an important thing, is understanding the sector to industry outlook. But this charting service is TC2000. But for news and anything in the morning that I'm using to take a look at my watch list is always Benzinga Pro. All right, let's keep going. Let's take a look to see if oil is getting a little bit of a bounce back. Will that kind of hold on up? I'm looking to see if Oxy is going to bounce back, but it doesn't look too good right now. Let me take a quick peek at the WTI contract. I'd like to take a look at WTI to take a look if oil's coming up, and it doesn't look too bad today. We could see a reversal later on. I'll be expecting oil to get a little bit stronger, especially if the front month WTI can continue moving in direction, up about 1.3% right now to $86. Remember, we had some resistance just a couple of days ago towards the 90. That's what we're looking to see if we can break through and move crude oil towards above 90 if you're a bull in kind of these oil stocks and trying to see them get towards the new highs. All right, it's about 10:51. We'll be getting off in about 9 minutes here, wrapping up at 11. You guys can keep on throwing some stocks, and I'll do my best to kind of give you guys what I do here. All right, let's take a look here. I'm just trying to take a look at the chat here. All right, let me refresh here. He's kind of lost the chat there. Oh, there he is. Show chat. That will help. All right, what else? What other stocks you guys got? What's a quad witch and how does it affect option trading? Well, honestly, Ready Trader One, if you want to know more about the quad witch, I think Joel is really the best one to explain it because he's one of the people that investors that really follow these quad witching. So what I'll do for you is come to at the close today, 3:30 p.m. Eastern. If you come on over, I'll make sure that Joel covers exactly what quad witching is and how you can use it for your trading. Like always, I could explain it here, but I'm not the best option expert. So you got to know where you're an expert, or at least where you have some strength and some weakness. In the option game is where I have my weakness. So I'm not going to go ahead and try to act like I'm an options expert. All right, so let's keep going. Let's take a look to see what's going on in the markets. Going back towards my 3 charts here. Will Apple take out those lows, or will it come back through the 150.53? If you get that, you could get another spike there in the market. How's the market looking? It bounced right off the VWAP there. So let's see if we can get through the 385.50s. We're using some resistance from the pre-market to see if it can kind of hold there. But the SPY is bouncing a little bit, and so is Apple. Takedown of 148.48 is where I would expect to see some continued downside in the SPY. All right, we got about 7 minutes left. So if you guys got any tickers, go ahead, throw them on up. Just going to keep going. YouTube says at the close at 2:30. So many lonely hours. I sat there waiting. Time zone difference. It should update for you on YouTube. YouTube usually updates your timing correctly, but it's Eastern, 3:30 Eastern. But if you go from 1 p.m. to 2 p.m. Eastern, you can come to my show, Stock Market Movers. Got some great guests on today. I'm actually going to have on the person that put out the recent short report on Coinbase today. So come check out Edwin Dorsey in the bear cave as we talk about Coinbase. It got hit hard yesterday on that short report. We'll see. It's pulled back. Will Coinbase come up today or will it come down? Come on, check out Edwin Dorsey and the bear cave. We'll see what happens there in coin today. I also am going to be taking a look at the 2 Korean fund. So if you like commodities like wheat, corn, soybeans, if you want to talk about those, come on over. We'll be having that at 1 p.m. Eastern later today. What's a gap fill? Is it a good or bad thing? Great question, Ron Diggy. Let's go looking for one, right? And so what's a good gap fill that filled? Roku. Roku's a good one. Roku's a good example. So let's go ahead. Let's take a look here at what a gap fill is. I already have it kind of labeled out too. So one thing that happens with stocks, right? And I'm going to pull it back so that you don't see the gap at first, right? Sometimes you have stocks that are in kind of a sideways trend. And then for some reason, or it could be earnings, right? That could be the reason it gets hit with a negative catalyst. A lot of times what's going to happen is the stock is going to come down massively in after hours or pre-market. And after hours and pre-market is how really we determine a lot of the times our gaps on the daily, right? Because we don't see the pre-market and the after hours on the daily charts. So a lot of times you'll get what's called the gap zone. So right there on this day, from this day to this day, we came back down. On the 28th, we went all the way back down there and we opened up at 66.10. And so that was all the way back down here. Now, one thing that we look for is, will the stock come back and fill up the space that it just gave up, that gap? And so a lot of that is that pre-market and after hour action. So some people call this not just gaps, it could be called the shadows. So if you want to take a look at this, there's also called shadow fills. And so this is what you want to be seeing. And if you're looking to play the reversals, you're looking for it to gap back towards that drop where it came from. And you look to the right, look how this kind of filled it and filled it pretty quickly. You see how it filled right over here? Boom, you got the fill all the way back to that date. And then it comes what? back down eventually. And that's what you usually see a lot of the times. Like you get these little spikes, comes down, fills the gap, and then just starts fading off of that. Is it a good thing, bad thing? Honestly, you can't really just go off of that. But what it shows you is sometimes prices get too extreme. And because of they get too extreme, they start coming back. And this is a clear example where Roku probably went down way too far, way too fast, then worked its way back towards that level. And then what happened was it got sold at that level. It got sold in the 84s. It got sold in the 82s. No one wanted to keep buying up there towards, let's say, 88 or 90s to get it back towards 100. Then Roku started selling off and coming right back down. This happens often. Take a look at them. Shadow fills, gap fills. You can look it up on Google and learn a lot of strategies that are actually off of this. There's some called the floating island and things like that. All right, Blink. Well, let's go to Blink. Well, Blink is, what do you mean gapping? I didn't see too much of a gap there. There's probably a really small gap there on the daily. Yeah, it's a small one. It just came down here. You could see it there. So you came down from 2271 down towards 2256. But you could see how kind of like you just kind of faded off. It's coming back down. I mean, these are probably not hanging on. A lot of the charge point, these had really good days, but they're kind of going sideways. They're just not having a really good kind of continued rip. And this can happen. EVgo, very similar stocks. These were all moving very strongly yesterday. Volta is probably one of the strongest one of the three, but charge point definitely coming down fast also. So just be careful with these. All right, let's go ahead. Let's get it going here. Lewis, yeah, I saw you on a little bit earlier. Lewis Hoch. Yes, you got it right. I honestly was impressed. I was like, man, he might be related to me somehow. Lewis Hoch, if you ever need somebody to run with the Hodges, let me know. I'm here for you. All right, but that's going to probably do it for me, guys. It's 10:59. I'm just going to really quickly take a look at the SPY again, take a look at Apple, see what's going on there. I talked about it. If you saw Apple take out the lows, you'd probably see the SPY take out the lows also. And look how Apple's starting to head down towards that 148.48. If I see that 148.50 level right there break through, I'd look for the SPY to kind of take out that 382. But like always, this isn't financial advice, just educational, just trying to show you guys the process and how I like to attack the markets. Welcome back, my friend.
Hey, Mitch, how are we looking in the markets?
Looking like we had a short-lived spike, and that's the only thing that I'm concerned about. It's looking like we're heading down really quickly. Apple starting to give up, and one of the easy signs that you can look at when you're looking at the market is just look at the leadership, right? Biggest stocks in the market make up about 8 to 10% of the S&P. So when those stocks get down, more than likely you're dragging the market with it. And so a lot of times I look at Apple, Tesla, Google, Microsoft, right? We want to be looking at the leaders. How are those performing today compared to the market?
100%. Well, we'll keep looking for that bounce, man. Hopefully we come back soon. Very excited for our next guest, though. We're going to get to talk about the market in relation to real estate alternative investments and get to see what's going on there. So, Mitch, thank you for joining us and jumping on there. We're going to bring on Ryan Frazier, the CEO and co-founder of Arrived Homes, to close out All Access this morning. Ryan, thanks for joining us, man. How are you?
Hey, good morning. Doing well, doing well. How are you?
Doing great. It's a pleasure to have you here, man. Really excited to chat with you and chat about Arrived Homes, one of our premier partners here at Benzinga. We've worked with you guys for quite a while. Very exciting to be having this discussion, especially with everything that's going on in the markets. Can't wait to learn more about what you guys do. So kick us off there. What exactly is Arrived Homes? What is the company all about?
Yeah, it's a great question. So Arrived is really a platform for investing in rental properties and vacation rentals, and starting from $100. So we've really gone out and securitized and created these share-based investing in real estate. So investors can come and buy shares of individual properties. And then Arrive takes care of all of the work. So we manage the assets on behalf of investors and really make it a passive investment. And really what we're trying to do is just make it a lot easier to access rental property investing or investing in vacation homes or Airbnbs, and access the passive income, the property value growth that can come from this segment, and make it more of a accessible investment for investors.
Awesome. Okay, now let's talk about growth, right? A coworker and a good friend of mine, Adam G. Partridge, who's been a big part of our partnership with Arrived Homes, working very closely with you guys. We were talking this morning about Arrived and everything that we've been able to do with you guys over the last few months, last couple of years, and just how quickly you guys have grown. You've seen a huge number of users and investors on the platform. Talk a little bit about how radical the growth has been for you guys.
Yeah, I think it's been pretty exceptional what we've seen. And I think it embodies the fact that rental property investing is something that is, of interest to many people. Most people in their life have had friends or family that have done really well with real estate. But for a lot of us, I think, either having the time or the kind of experience to go out and purchase property, or these now large upfront amounts of capital to go out and buy homes, just puts it a little bit out of reach, maybe a little bit further down the road. And so that's really what we're trying to do. Over the last year, we've seen over 100,000 investors come and sign up and start participating on Arrived. We've funded over $60 million of rental properties, over 150 assets across 20 cities. It's been incredible to see. And ultimately, on Arrived, those assets are owned by all of the investors using the platform. So it's really been fun to kind of make that more available.
Very cool. And correct me if I'm wrong here, but the vacation rentals are still a fairly new part of Arrived Homes, as far as I'm aware, right? What led you guys to really get into the vacation home rental market, and what does that market look like right now?
Yeah, I think it's interesting. One thing that led us to creating the kind of long-term rental product is the fact that over 50-60% of people that we're talking to have viewed rental property investing as one of the best long-term investments out there, but only 7% of people have been able to invest in a rental property. If you look at vacation rental properties or Airbnbs, it's even lower than that. It's less than 0.5%. And so the fact that we've had now Airbnb over 1 billion guest arrivals, they've generated over $150 billion in rental income for owners, but then less than 0.5% of Airbnb guests have been able to access the owner economy that has been created by these vacation rental platforms. That to us is just something that was really exciting, that we could play an important role in making it a lot easier to access the economics that come from vacation rentals and investing in those properties. And so you're right, very new for us. We spent about probably 5-6 months developing the product line, getting everything in place, registering these offerings with the SEC. So these are SEC or SEC qualified offerings. And we launched our first 7 markets last week. And investors came and funded and invested close to $5 million in vacation rental properties just last week. And I think there's a lot of interest in investing more and more in this segment.
Awesome, man. Very exciting. So let's talk about some of the bigger topics, right? The real estate market as a whole, obviously with what you guys are doing, very tied to the real estate market in general, obviously fractionalized buying real estate, not actually purchasing actual properties. But what do you see in the market right now, especially over the last 6 months with the real estate market that we've had? Incredibly hot sales, very, very fast moving on the market as a whole. But what have you seen in the market, and how has that affected Arrived Homes in any way, if at all?
Yeah, the market has been really interesting this year. At the beginning of the year, it was very hot. Property values were growing quite quickly. And then we saw the Fed start to change interest rates. I think one of the things that did is just start to create some yield compression in the market. On Arrived, we had been paying out on long-term rentals, something like 5, 6, 7% annualized dividend yields. And now the range for long-term rental properties is kind of in the 3 to 7% range on dividends or cash flow. And that's one of the reasons that we've been looking at different types of assets and why vacation rental properties are kind of an exciting segment, because they can, help drive, higher rates of cash flow. And so that's one of the things that we've been looking at. The other thing to keep in mind that we think is interesting is just the fractional investing. You'll be able to invest smaller dollar amounts in multiple properties, across the country or over time. It's really about diversifying. You don't have to save up for a massive down payment on an individual house. You can do more dollar cost averaging within real estate. And I think that's something that we've seen, investors doing that is really exciting to us about kind of what fractional investing in real estate can open up is you can start to take out the elements of having to time the market because you're buying a whole property. And so that diversification, I think, is a big part of it.
No, it's awesome. It makes a ton of sense. And obviously, the fractional real estate investing is something that's become extremely popular with our audience at Benzinga. Just this alternative investment and the ability to put in, smaller, like you said, dollar amounts into these projects and buy a larger access to the market instead of just one individual property with a huge down payment is a really, really unique concept. And talk to us a little bit about differentiation for what Arrived Homes does too, as opposed to other alternative investment companies out there, right? There's obviously a lot of people trying to get into this space. Alt investment is still relatively new in the markets, but you guys have had a ton of success very early on. What are some differentiating factors that you think set you apart from other companies doing the same kind of thing?
Yeah, I think one of the big things that folks coming to Arrive are really looking for is investing in residential homes as a segment. So these residential homes on the long-term rental side, but also now on vacation rental properties or Airbnbs. And when you think about the experience of investing on Arrive, investors are able to pick and choose which individual properties they invest in. And so a little bit different from other platforms where it might be more of a blind pool or a pooled-based investment. Investors have that freedom of choice to build a portfolio on their own, and that might mean investing in different areas of the country that they find compelling, different product types or different home types that might match what they're looking for from an investment perspective. Maybe you're interested in just investing in vacation rentals or only long-term rentals. Maybe you're looking for leveraged returns or unlevered returns for less risk. So there's a lot of dynamics that investors can kind of pick and choose what makes the most sense for them. And that's really what I think we see folks getting excited about is it really recreates that experience and the returns of investing in real estate directly on your own, but without the same level of risk or kind of effort required to go do that.
Awesome. Now, I know we've got some slides and some images pulled up. I think we can get those on the screen whenever you're ready. We can walk through whichever ones you want. Happy to dive in wherever there. But another question, too, as I come through this is, where do you guys make the determination about which properties you want to buy, which ones you want to add to the portfolio? How do you evaluate the market? How do you determine which properties are best for investors? What do you have on that end?
Yeah, I mean, really, it's quite simple in some elements. We are really looking for areas of growth, and for us, that means population growth. So where are we seeing, strong performance in the population growth year over year, decade over decade? So where is those trends moving? And then also, where is there potentially some limitations on adding supply? Those two factors, population growth, but challenges with adding supply lead to property value growth and sustainable rental incomes for investors. And so that's really what's kind of helped drive things in a relatively simple way. And when you look at where we're at, we've added now over 20 markets that investors can invest in. Those are areas of the country like the Southeast that might have potential higher cash flow or dividend opportunities. And then we have faster growing markets and cities, areas like Nashville or Denver or Phoenix that might be a bit more kind of property value growth focused, appreciation focused. And people are either picking and choosing, what are those areas that they want to invest in more, maybe for appreciation or for dividends, or maybe they're diversifying and kind of grabbing a mix of both.
Makes a ton of sense. Okay, so the selection strategy that we've got figured out with you guys here. Let's also talk about the plan ahead for Arrived Homes, right? With everything that you guys have achieved so far, and like I said, parabolic growth, especially over the recent months. You guys have grown really, really quickly in terms of total investors. Where do you see the platform evolving to eventually? Give us a 1-year time frame, 3-year time frame. Where do you see Arrived going next in terms of obviously growing with more investors, growing with more properties and opportunities? But do you see the platform evolving into other branches as well, investing in other asset classes or anything like that?
Yeah, it's a great question. We've really worked hard in making sure that we're getting consistent inventory, basically access to these investments in the hands of investors. Because we saw such rapid growth on the kind of investor interest side, we got into this scenario where properties are being fully funded very quickly. So we see that very consistently properties will be funded in less than 24 hours. And I think that's really been a focus of ours, of how do we just make sure that we have more investments, more great investments available for folks so that people can come in and invest. Now, where are we headed from here? I think vacation rentals is kind of the first new product that we've added for Arrived over the last week, and absolutely our intent is to continue to add new types of investments for investors who are interested in different types of assets. We'd love to hear from folks in terms of what they want to invest in. Our approach so far has been kind of following a curve of single family homes in higher cash flowing markets, then single family homes in higher appreciation markets, now single family homes in the vacation rental segment that provide these are attractive destinations that have high appreciation potential, but also higher potential for cash flow. And the exchange for that is some potential seasonality on the income. So as you think about where we're headed next, there's a lot of potential areas that we're looking at. We're looking at potentially going into some of the small format multifamily, and in general, really Arrive could support any type of asset. What we've created is a process for buying a property and creating a house IPO, if you will, where investors can come and invest. And so the ability for us to come and IPO any asset is on the table.
Awesome. And give us more of like a broader kind of thought leadership, little bit of a topic here, right? When you're looking at everything that's going on in the market today, we talked about the real estate market a little bit already, and that's probably where we'll close things off. But when you're looking at all the different news items in the market, all the different places you can invest your money, the ups and downs and the volatility that we've seen across the space, across industries and everything else, why is right now the time to be investing in alternative real estate? And of course, you talked earlier about, right, the dollar cost averaging and the ability to put smaller amounts of money in and get more access to the sector, which is great. But with all the relevant news items in the news today, why is right now the time to be investing in fractionalized real estate and alternative investment?
Yeah, I think that what we've seen from investors and what they're telling us as well is as there's more volatility and uncertainty moving to other types of public assets like the stock market, the crypto markets, investors are trying to decide, what do they do? Do they hold it in cash? Do they move it into potentially a more stable asset like real estate? And that's really what I think we've seen, is that historically investing in rental properties has been able to deliver double-digit annual rates of return split between dividends and property value growth. And I think that ability to make money in multiple ways from real estate, property value growth, dividends, and then also the tax efficiency of being able to offset depreciation against the income, makes it a nice piece of diversified portfolios. And so anyone who's looking for potential cash flow right now, it's a great potential investment. And then the other elements are a potential inflation hedge and things like that in real estate. I know that with interest rates moving and where we're at in the market, there's concern over where we at in terms of property values, and we're certainly looking at that closely, and trying to be quite conservative in our underwriting to make sure that we're buying great assets on behalf of investors and making those available. And I think in general, that's really what folks are looking for when they're investing on Arrived and investing in properties, is that kind of slow and steady develop wealth over the long term, and kind of have that as a background piece while they might be looking for more deals in other areas, other asset classes, once these other markets start to settle.
Awesome. Makes a ton of sense. And take us through the process for getting involved with Arrived Homes, right? As a new investor, if you want to get started, you want to start buying some fractionalized real estate, how do you approach Arrived Homes? How do you get started on the site? What's that sign-up process look like? And what's your experience look like as an investor from there?
Yeah, it's a great question. So for anyone interested, just it starts on our website, arrivedhomes.com. You can come and browse properties that we have available, all of our inventory there. You create an account, link your bank account, just like creating any other, investment or brokerage account. Takes just a few minutes, and then from there you can buy shares and invest. And I think we've timed it that from sign up to first investment, it takes under 4 minutes for investors typically to get started. So it's very easy versus the month long process of typically buying a whole home potentially on your own. And then after that, it's even easier. You're just picking which properties you want to invest in, select how many shares you want to buy and check out, and that is the process from there. And then after that point, what happens next is we operate the property on behalf of investors. We pay out dividends to investors on an ongoing basis. We report on the performance and the future valuation reports of the property to update your investment values for investors, and ultimately get to enjoy the benefits of property investing without a lot of the typical work involved.
Absolutely. Okay, and we started here and we're going to end here as well. Again, looking at the market as a whole, you just touched on it a couple of minutes ago, but I want to go over a little bit of a deeper insight here. When you're looking at everything that Arrive does, and you've done an amazing job at breaking down why it's so beneficial to do fractionalized real estate investing, specifically with Arrive. So obviously, of course, we would have to shamelessly plug that anybody that wants to get involved in real estate investing, check out Arrived Homes, one of our favorite partners. You guys do amazing work and the platform is phenomenal. But as you're looking ahead to the markets and everything else, you mentioned inflation, you mentioned rising interest rates. Is there anything that you are concerned about in terms of what Arrive needs to address and look forward to in terms of hedging for the properties when we're looking at the market in the next 6 months, 9 months, 12 months, or anything like that? Or do you think you guys are going to be able to maybe mitigate that risk by being very selective with the properties you add to the portfolio?
Yeah, I think that's been, a key part of how we're approaching it, is being very selective in terms of what we're buying. Our investments or acquisition team comes from institutional single family homes. Several folks from American Homes for Rent, who's the second largest REIT in the country. They have a lot of experience in, buying assets in different times throughout these market cycles. And if you think about, our approach and the volume of properties that we're buying, today we're underwriting something like 50,000 properties a month in the markets that we're in. And, we're offering or reviewing on, 0.1% of those that kind of make it through the initial evaluation process. And so there's a lot of selectivity in terms of, what are we looking at? What do we think is going to be a great investment? What do we think is going to drive rental income or cash flow for investors and sustain its value? The other things that we're looking for, and again, it kind of depends on what investors are interested in from the kind of investment mix. But as interest rates have moved, we've really looked at asset types that can provide higher levels of cash flow to kind of make sure that we're still getting some positive effects of leverage if we're putting leverage on the properties. And we're also offering some unlevered properties. So if folks want to access some inflation protection, they want to access these yields that can come from real estate, the 3 to 7% that we're talking about. Sometimes the unlevered properties can be a way to do that without some of the deflationary risk if prices were to change more quickly. And then over time, I think it's interesting. We've seen that certainly the market has gotten less competitive, fewer buyers for each individual asset, which is great because it means that we win more of the deals that we want on behalf of investors. But we really haven't seen yet a large price decline or correction. There's still a lot of, I think, robustness in the market today. There's still historically low inventory available, and so there's a few things that are kind of sustaining the market, that are kind of keeping it steady state, but not in a scenario where we're seeing large price declines.
Absolutely. A lot of great info. Ryan, it's been an absolute pleasure talking with you today. Again, like I said, we love working with Arrived Homes, one of our favorite partners. And of course, we would recommend to any investors that want to get involved in fractionalized real estate investing, go to Arrived Homes website, get started there, and start getting involved in fractionalized real estate investing. Ryan Frazier, CEO and co-founder of Arrived Homes. Thank you so much for being with us today.
Yeah, thanks for having me on. Thanks, everyone.
Absolute pleasure. There's the CEO and co-founder of Arrived Homes, a partner of Benzinga, joining us on All Access to close out the rest of the show today. A couple of notes before we get finished up and move into Benzinga Live or whatever show is coming after this, depending on our programming schedule. Of course, we want to mention our sponsor, Ticker, which sponsors every episode of All Access throughout the year. You can get involved in ticker.com. That's 2 I's in Ticker. We're going to play their promo video one more time. We'll move into the close.
What is Ticker? That's right. Ticker with 2 I's, just like you. Because it's for you, for investing, for stock perks, for connecting you to public companies who reward you as a shareholder, as a brand lover. That's why people can't stop tickering. Ticker, where investors discover shareholder perks and consumers become investors in the brands they love. Ticker. Start tickering today.
Fantastic. And that's going to close it out for All Access today. Again, one more final note, too. You can fill out that contact link form underneath the YouTube video to enter for a chance to win $100 in the giveaway that we do every Friday during All Access. You can also scan the QR code on the screen. But to close out, again, a big thank you to all of our companies that presented, all of our sponsors. Ticker, of course, get involved at ticker.com. And we will see you guys right back here next week on Friday for All Access.